Have you ever felt like traditional banks nickel and dime you with hidden fees and a maze of confusing products? You're not alone. That's where challenger banks like Fidor step in, promising a more transparent and community-focused banking experience. But with a sleek app, innovative features, and a focus on customer satisfaction, you might wonder, how does Fidor Bank actually make money? Buckle up, because we're diving into the not-so-secret world of Fidor's financial engine. The disruption, banking reimagined. Fidor Bank isn't your grandpa's bank. Launched in 2010, they built their model around the idea that banking should be simple, social, and beneficial for everyone. They ditched the traditional branch network and embraced a fully digital platform. Imagine managing your finances, sending money internationally, and even connecting with other Fidor users, all from your phone. Here's what sets Fidor apart. Community focus. Fidor fosters a social atmosphere. Users can interact, share tips, and even participate in decision-making through crowdsourcing initiatives. It feels less like a bank and more like a financial club. Transparency is key. Forget hidden fees and complicated products. Fidor offers clear pricing structures and focuses on providing the tools you need, not upselling unnecessary services. Innovation at the forefront. Fidor constantly pushes boundaries. They were one of the first banks to integrate Ripple for faster international payments and actively partner with fintech startups to bring the latest financial tools to their customers. So, how does Fidor make money? Now, the million-dollar question, with a focus on transparency and potentially lower fees, how does Fidor keep the lights on? Here are the key revenue streams that fuel this innovative bank. Transaction fees. While Fidor might not charge monthly maintenance fees, they might generate income from certain transactions like international money transfers or currency exchange. These fees are usually transparent and often lower than traditional banks. Interest on loans. Just like any bank, Fidor can offer loans and credit products. The interest earned on these loans contributes to their bottom line. But here's the twist. Fidor is known for offering competitive interest rates and focusing on responsible lending practices. Premium features. Fidor might offer premium features like advanced budgeting tools or priority customer service for a small monthly fee. This allows users who want a more personalized experience to contribute to the bank's revenue. Partnerships and integrations. Fidor actively partners with other financial services and fintech companies. These partnerships can take various forms, from co-branded products that generate shared revenue to simply offering access to Fidor's platform for a fee. The future of banking, a collaborative ecosystem. Fidor's success highlights a potential shift in the banking landscape. By focusing on customer needs, transparency, and a collaborative environment, Fidor proves there's a way to be profitable without nickel-and-diming customers. This doesn't mean traditional banks are going extinct. But it does suggest that the future of banking might be a more collaborative ecosystem. Imagine a world where challenger banks like Fidor offer innovative features and transparent fees, while traditional banks leverage their vast resources to provide stability and security. Ultimately, this competition is a win for consumers. We get a wider range of choices, better tools, and hopefully, a more positive banking experience. With that said, thanks for watching, and until next time, let's keep challenging the status quo and building a better financial future for everyone.